Welcome to Common Sense Investing. My name is Cameron, and we're here to talk about microcap stocks on another Monday evening live stream. Talking about microcap stocks because I love it. I love the space. I love investing in such small companies. There's so much drama. There's so much money to be made. There's so much to talk about, which is fantastic for my channel. I would hate, it would be like one of my worst nightmares to be one of those channels that basically just every day I just talk about Tesla, right? There are those channels out there where it's just like one large stock and that's all we talk about all day. That is not me. I talk about microcap stocks. Some people call me crazy. I absolutely love it. Today, again, always a little bit of drama. We're going to be talking a little bit about the macro market, whether market conditions are getting better or worse, whether the bull market is going to continue, or whether we get a little bit of a bear market or the end of the world, end of everything bear market that I know some people are worried about. I'm also going to talk about some companies that have now reported Q2 earnings, and we're going to talk about some other companies that are going to report Q2 earnings probably this week. So that's kind of what I have on docket for you today. As always, I have my little presentation built. Feel free to interrupt, ask questions, comment, whatever you want to do. I pay attention to the comments. But if I don't get to you right away because I'm just in the flow doing my presentation, feel free to leave them. I have a question and answer period at the end, and I'll get to everything, or at least I'll try to. And thank you for joining me, because if you're watching this now, if you're Canadian, it's a long weekend. Today's a stat holiday, and today the markets were closed in Canada, but they were open in the United States. And that's something that I want to talk about today, because this was Friday, right? This was not very long ago. This was the close of the markets on Friday, where basically everything was ending. The worst week in months on renewed economic fears. There was talks here on, and not just here in this one article, it was almost every article I was reading. Cracks in the U.S. labor market, President Trump's newest barrage of tariffs shaking investors around the world, weighing on stocks, the dollar, and more. It was just epic collapse is kind of what everybody was talking about on Friday. Classic social media kind of over fear. We get a lot of over greed. We also get a lot of over fear. But there was some economic data obviously driving some of this, right? The Trust America trade is under threat. Why the jobs report, BLS firing, and Fed resignation sparked market jitters. This is BLS is the Bureau of Labor Statistics. They basically came out with a jobs report saying that jobs were actually going down in the United States, and then Trump fired the director. It was just, if you've seen some of the comics talking about Trump after the first Trump term, it is fascinating, because years later we will laugh at this, right? Years later we will laugh at this. Like, wow, you remember when Trump did this? You remember when Trump did that? But now when you're in it, it's just like, the market's a little bit weak, and then it's just chaos and drama. And that was Friday. That's what we basically left Friday out on. At the end of the day, though, I try not to pay too much attention to it. As much as I talk about it for fun, and I do think you have to pay some attention to the markets if you're investing in microcap stocks, there's a disconnect. There's not only a disconnect between like the macroeconomics and the major market indexes, there's even a further disconnect from those indexes all the way down to some of the little Microcap stocks that we invest in on this channel, right? But at the end of the day, we can't forget the stock market is forward looking. And one of the things this is one of my favorite times to invest sometimes, is when the fear index gets too high, because this is an old joke. The stock market has predicted 10 of the last 5 recessions. And sometimes when we get market fear, that is one of the most absolutely best times to buy. I got receipts to back it up. You can go back to Common Sense Investing this year in 2025, in February, in March, in early April, when the markets were down, when tariffs were going to change the world and the stock market was going to crash. And I was the only the only person I knew that was here every week saying like, I love this. I'm all smiles, right? Like, Share price is down on companies that I love. I was going to buy this company at this price up here. Now price is down here. Why not? It's basically on sale. So, I mean, you do have to be careful. Eventually, you are going to get caught in a true bear market. You have to be prepared for that, maybe holding a stock for an extended amount of time, before you see returns if we do get a significant downturn like we did in 2022 and the first part of 2023. But I mean, usually we just get these short market downturns that create another opportunity for buying into microcap stocks. We haven't really got that yet. We had last week, the market was perfect right up till Tuesday. Wednesday was bad, Thursday was bad, Friday was bad, and I was thinking, okay, here it comes, right? We've had 3 down days. We've got a whole weekend of Trump to do crazy stuff. Canadian markets are closed on Monday. The U.S. markets open on Monday. At least we get that. At least we get to see what happens in the U.S. before the Canadian market opens again. And lo and behold, best day since May. You can't make this stuff up, right? You really can't. All the fears, all the jitters, all the jobs are down and inflation is sticky and rates aren't getting cut. All the negative news from last week. At least today, at least on Monday, the U.S. market, best day since May. I mean, what a story. Absolutely fantastic. So as always, I say it's better to have a plan than no plan. You make a plan, you make some guesses, you make some educated guesses. You look and see if you were right or wrong, and then based on whether you're right or wrong, you learn why you were right or why you were wrong. You learn from that, and you go back and make another plan. And over time, that plan just gets better and better and better and better. So right now, not a lot has changed for me. I'm still planning for a bear market. I am, but I also want to be in a position of capturing a bull market. I do worry sometimes that people leave a little bit too early from these bull markets. I mean, I wait around. Sometimes we wait around like 2022. The end of 2021, 2022, most of 2023, we basically waited around for 2 years for a bull market to finally come. It started in late 2023. Arguably, we got a better bull market kind of mid-2024. We waited 2 to 3 years for a bull market. So we do have to be careful. At least in my opinion, I'm trying to be careful for myself to not be too negative and like this bull market is just going to be ending. I do want to capture as much of this bull market as possible while still planning for the bear market. And that's kind of what I'm doing now. That's what we're talking about today. Because next step on where this market goes, at least for some of these microcap stocks that we talk about, is right now in earnings season. We are in Q2 earnings season. We get to see, some things we can't control here, like whether or not Trump makes trade deals or no trade deals, or whether the bull market actually continues or whether it ends. What we can control is evaluating companies' earnings and doing some maintenance due diligence, right? I'm not just looking for strong Q2s. I'm looking on what the company is saying for the second half of the year. That's really what I'm looking for on Q2 right now. Is, okay, Q2 might be good, Q2 might be weak, Q2 might be flat. What does Q3 and Q4 look like? Are our companies starting to recover from the downturn that was February, March, and April, right? That's kind of what I'm looking for right now. So when we have all these companies reporting earnings that I'm going to be talking about, that's kind of what's going through my brain, not necessarily cheering or booing the Q2 earnings. I'm looking more towards what are companies saying? What are the CEOs saying about the future? Because again, the stock market is forward looking, right? So what are companies going to tell me about Q3 and Q4? Because a lot of these companies were saying that things were going to improve. Remember in Q1, Q4 of last year and Q1 of this year, a lot of companies had weaker than expected earnings. They talked about a return to solid growth in the back half of 2025. They talked about delayed contracts. They talked about shipping delays. This was all due to the elections and then Trump getting elected and then tariffs and then trade issues caused a lot of weak quarters. So right now I'm looking, are we getting back to normal? So we've been talking about this. I had a video on my Discord and for my members of the Substack lately, which adds value. I'll talk about in a second, talking about preparing for this upcoming bear market. And one of the things that we were looking at was this, right? This is the seasonality of the S&P 500. And if you look at microcaps do tend to sometimes follow the major market trends. If the markets are having a red day, basically microcaps are usually going to have a red day, plus or minus an exceptional company that is just absolutely kicking ass. But pretty much what we are looking at is, August and September are usually weak months for the S&P 500. So with not a lot of press releases for microcap stocks, from now until October, they're going to be reporting Q2, and then there's going to be a nice long quiet period. With this seasonality being low for the S&P 500, we are kind of somewhat expecting a fairly quiet next 6 or 7 or 8 weeks, right? Way too much time on my hands to basically develop this graph. And I had a whole bunch more built in the members only live stream, but basically what we've seen is that normally with the S&P 500, we have this bull market in spring, right? March, April, and May is typically when we get the bull market in microcap stocks. We missed out on that because of Trump and tariffs and trade. Instead of getting these good months when they usually happen, we had really, really bad months, February, March, April, and May. It was only around, late April, start of May, when all of a sudden we've had this bull run that is now extended through May, June, and July. We've had an awesome bull run in microcap stocks. I think all that really happened is this cash, this liquidity, this volume, all this buying pressure simply just got moved back. It just got moved back. So either way, we had a bull market. We had a little bit later than usual. And the question becomes, what happens here with August and September? I think a large part of it is going to be what Trump does or what Trump does not do. Do we get trade deals? What kind of economic data do we get? Do we get excitement about the future, or do we get another quote unquote trade war with China kind of thing, right? Now, we do have some things to look forward to, typically October, November, good months for the S&P 500, as well as we get small cap discoveries in Vancouver, which I will be attending in person. We have Planet Microcap Toronto. We've got Investor Summit Group online. We've got some other investing conferences to get people excited about microcap earnings, which are also right around that time. And then, of course, in December, we have tax season, which can be volatile for microcap. So basically a little bit of fun guesswork into what is going to happen in the future. Oh, CNO. I'll talk about CNO as soon as I'm done here. Can we take a look at Wiser AI Systems to tell me what you think currently about 23 cents per share? I'll think about it. I never heard of that one before. I've got a few other stocks to talk about first, but before I get there, I'm really excited about this. I'm really happy about this. I keep trying to grow value for my paying subscribers. In the past year and a half, I've only had the Patreon and the Patreon Discord. In the past, 4, 5, 6 months, I developed a Substack, but it was always the Patreon Discord and then the Substack, and that was the two choices. Right now, it is not just the Patreon Discord, because I have now made the Discord available. Thank you, technology. I have now made the Discord available to paying subscribers on my Substack. So they're basically identical. You get the same things from joining my Patreon and joining my Substack. You get early access to videos, you get members only live streams, and now both the Patreon and the Substack get access to the Discord if you want it. So it's a busy place. This is where we do basically all our research. This is where we find the companies that eventually make it onto my YouTube channel for videos, and you get to find out about them long before I ever make a public YouTube video on them. So go check it out, www.commonsenseinvesting.ca, and Patreon and Substack are now my two options, and whichever you prefer, because they're basically identical. Now, it is time to start talking about some companies here. and some earnings and giving some opinions and looking at some financials. So before I get to that, please don't forget, I'm not a financial advisor. I'm not your financial advisor. This is for entertainment purposes only. And I'm not saying that as a disclaimer. I say this all the time. I don't know anything about you. I don't know your experience levels, whether you're a small capital investor, a large capital investor, how much risk tolerance you have. I know nothing about you. There's no possible way I could give you any kind of financial advice because I don't know anything about you. So we're just chatting because where else are you going to do this? We need to talk and give opinions and have communications about these stocks because this is how we learn, right? So not financial advice. Gatekeeper Systems, $136 million market cap. What a success story. I talked about this last live stream. You know, how many times did I interview their CEO, Doug Diamond, who said, just buy and hold the stock forever is always what Doug said, right? And that was back at like 20 cents, and now it's sitting here at $1.31. It's holding up nicely. They did report earnings, 7.47 million of revenue, up 16%, still net loss, still a loss per share of, you know, third of a penny basically, so not much, but still unprofitable or close to break even. That was their Q3. So, you know, tough, $7.47 million of revenue for Gatekeeper in the quarter on basically a $130 million market cap company. So there is a lot of success priced into this share price. However, at the same time, you know, what people are betting on, and I think the reason to still be excited about Gatekeeper Systems is all the contracts, all the news, you know, all these contracts over 7 million, 5.4 million right here, right? Video management hosted service subscriptions, so the recurring revenue grew from 300 to 3,500. That's massive growth. They should really put a percentage here just to get people riled up. And then again, a little bit more of a focus expanding into Federal Railroad Administration mandate. So transit, more than just school buses, they're trying to expand into trains. So, you know, this is an interesting company, huge success story. I absolutely love Gatekeeper Systems. You know, it's tough to value that company just on their financials alone, and you really got to be forward looking here and take a look. But their quarter is in the book. There we go. I bought Gatekeeper at 34 cents. Thank you, Cameron. No problem. That was great. I love Gatekeeper. I've been covering them for a couple years now. Source Energy Services, 179, basically $180 million market cap. Very boring company, but look at the volatility. And this is a play on liquid natural gas in Canada that's now heading to the coast. You know, this back down in April. I mean, I was just talking about what Trump tariffs and trade did to kind of kill that bull market. We were supposed to normally get a bull market right around this time of year. That's in those charts I was showing you. That's when the bar graph should be like this. And we're making money in February, March, and April. That obviously did not happen, at least with shareholders of Source Energy Services. And this is where this bull market just kind of got pushed out. But anyway, they sell sand for like fracking and gas extraction and stuff like that. So it's kind of an adjacent company to oil and gas. They reported earnings stunningly good. Very nice earnings, right? Sand volumes up 15%. Total revenue of $201.9 million. What's their market cap? $180 million. So they're still below one-time sales. $25 million increase. Net income, this one here is huge, $13.6 million, an increase of $8.9 million from the second quarter of this year. So you could tell that this company, when you try to model it for the future, when you get this kind of growth, they must have a lot of fixed costs, because it does seem like a lot of their revenue growth hits the bottom line very, very well. That is exciting. They still have a little bit of growth to come here with this next phase of their Peace River facility expansion. And then if they're buying back shares. So really nice looking company, really nice little quarter. And I'm very happy for shareholders of Source Energy Services Limited. You know, I wonder if this one goes higher over the next year. Very nice earnings. Hypercharge Networks. Left for dead stock, right? This was I'll show you what I was saying about them previously. They went down to this 6 to 7 cent share price right here. I thought that was crazy cheap. It is now up to 11 cents, and 11 cents right now is a massive $7.8 million market cap, right? So this is a little Microcap company, super high risk, super high risk. I feel like people expect too much out of these companies, like they're supposed to be well run like Amazon or something. Very tiny company. It's still got a lot of risk, a lot of problems. It's not perfect, right? Absolutely, that's not what I'm saying. A lot of risk. They just had earnings. I will link down below in the comments of my video. They actually put out a video on earnings. So not exactly an earnings call, but just the CEO and the CFO talking about the company. But I mean, Hypercharge, this was their fourth quarter. They have weird timing, and full year fiscal 2025 results. 305% growth in their charging ports. This is an EV charging company. They are the middleman in the process. They don't actually manufacture these ports. They just basically get other people's manufactured EV charging ports, plug them into the Hypercharge system, and then sell them to residential, commercial, industrial, fleets, and auto dealers, right? Recognized gross revenue. Remember, $7.8 million market cap. They recognized revenue of $10.1 million in the year, which was up 227%. So not perfect, but much improved, especially my opinion on them. This is amazing because back April 9th, 2024, I said congratulations to Hypercharge bag holders who mocked me for calling this stock a shitco pump and dump. Another 100 days of 4% gains and you will break even. Good for you. This is back when the stock was at 24 cents. This is a stock that did pump and dump in 2023. It went to about $2.50. It is now down. It went from like $2.50. It went down to 6 cents. Absolutely insane. So, I mean, a good company doesn't always equal a good stock, and a good stock doesn't always equal a good company, but I do think it helps to pay attention out there, right? You got to put some of your biases to the side, some of your opinions to the side, and look at a stock sometimes and just say, like, is it really worth 6 cents, or is there opportunity here for me to make money and this should be a higher share price, right? The stock market isn't always about being finding the absolute best companies, the ones that are saving the world and helping people. It's sometimes just about making money. That's what we are here to do, right? Cannara Biotech, love. Very, very popular in the cannabis microcap space, now up to $172 million market cap, basically. Fantastic. I mean, look at this chart. This is just gorgeous. I mean, if only more of my companies can get this bench up, you know, basically consolidate for a while, bench up, consolidate for a while. And I hope a year from now, I hope 2 years from now, we just continue to repeat this pattern. Basically consolidation for a while, bench up, consolidation for a while, bench up. And that might continue if they continue having, you know, earnings like this, right? I'm not going to go through the details. You can go check it out for yourself. But I mean, everything. Record revenue, record profitability, record adjusted EBITDA and adjusted EBITDA margin, record operating and free cash flow. And this one is huge. So not just paper profitability, actual operating cash flow records and free cash flow records. So congratulations, right? Absolutely fantastic. I don't follow this as much as I should because I don't follow cannabis as much as I should. But if you're interested in the cannabis space, and I mean, you look and see how successful this company has done, you know, go follow Stocks and Stones. That's Matthew Martin at the Rivmont Fund. And I mean, this was absolutely one of his early picks, and it's been an absolutely massively successful stock. So congratulations to him and the shareholders of Cannara. Avant. Definitely different. Not the chart. Not the chart you want to see. You know, went up, benched for a while, went up again, crashed, went up, crashed, went up, crashed, consolidating. you know, consolidating is probably the best news that Avant shareholders have had for a while, except right now it is showing weakness again right here after earnings, and you wonder if it doesn't go down lower. The interesting thing for me with Avantcore, $21 million market cap company, I love being a bit of a contrarian, and not a lot of people like this company. They just reported their revenue here. This is their full year fiscal 2025 results. So kind of like Hypercharge, weird accounting timing because a lot of companies are in Q2 and they reported their full year earnings. 35% revenue growth, 20% adjusted EBITDA growth, right? This looks pretty good. Positive outlook for fiscal 2026, driven by organic growth across its services, including this, that, this, and another thing, right? So you look at these financial headlines and you think, why is the stock down, right? Not only was it down in the past 6 months, down in the past 9 months, it releases earnings and goes down further. Well, I mean, obviously, this is why you have to go read the earnings and see what's actually going on. I mean, definitely not as much. They left out a lot, let's put it that way, on the earnings highlights. Net income basically down again this quarter. EBITDA is down this quarter. They had a very successful Q3, and basically we were looking to see if they can continue that trend, continue that success from Q3, and continue up in a good way. They weren't able to do that. However, you know, I don't think people are giving them enough credit. Overall, their full year 2025 was much better than their full year 2024. I still don't mind the company. I do understand that consistency is the key. And if you look at this, absolutely nothing is consistent about Avantcore. And that's just the problem. Up, down, up, down, up, down, up, down, right? Microcap investing is stressful enough that you don't need a company, you don't need a stock that you basically have no idea what the next quarter is going to bring you. That is a concern. At the same time, it is interesting for me because when I look at a stock like Avantcore here, $21 million market cap, you know, they have cash, they have basically no debt. This is just lease debt. Not many shares out there. We've got 37% insider ownership. This is their trailing 12-month revenue going up, and this is their share dilution, not going anywhere. So they have cash, no debt, no share dilution. There's a lot to like here. There is a lot to like here. The company needs to fix their margins. The company needs to improve their consistency, and this could be a real winner. But until they do that, obviously, people are not happy with them. They keep trailing down, going down. The guy they hired from Zenor, that's Zedcore, to grow tower business went back to Zedcore. Yeah, that's the rumor. That's what I've heard. So they did press release that they had hired the person from Zedcore who was selling the mobile security towers, and he was supposed to come to Avantcore and sell their Wally product, which is a very similar mobile tower product. That so basically people were hoping that Avantcore could be the next Zedcore, and Zedcore is very successful selling these mobile security towers. And the guy basically got to Avantcore and then decided to go back to Zedcore after only a short amount of time. So that has people bearish on the company, but again, is that priced into the share price? I'm not saying that Avantcore is the perfect stock, the perfect company, but is it priced in? You know, people are so concerned about one guy coming to the company and one guy going back to his original company. Maybe they're just not set up to sell Wallies effectively yet. They only have, I think, 8 in the field or something. I can't imagine going from a company where you have over, I think Zedcore has 1,300 to 1,400, and they're building 1,000 per year. So you go from a company that's basically marketing 1,500 devices per year, growing at 1,000 per year, and you come to this other company that's got 8. I think that was a poor career move. So yeah, I know they've got problems. You know, I'm not saying they're perfect, but I do think Avantcore is better than what their earnings or what their share price is at after earnings. So next one, those are all the companies that I saw report earning microcap earnings, and basically it's done, right? So Avantcore reported earnings, not very good, inconsistent. Lovey here reported earnings, very good, very good. Hypercharge, not perfect, but improved. Source Energy Services, very good earnings, but is that already priced into the share price? And then Gatekeeper, which is, people are more excited about the future than the current earnings. What's coming up this week is Symmetrix. So Symmetrix is, and this is kind of a unique feature here. It's not on this one, sorry. I'll show you on the next one. Management will host a webinar 1 p.m. Eastern Standard Time, August 7th. I believe earnings are August 6th after close, and then they have a webinar on August 7th. This is another beat up stock. It was down significantly. I'm definitely watching Symmetrix because Symmetrix is a Canadian company that's operating in the U.S. infrastructure sector. So it will tell me a lot. It will tell me whether the economy is kind of getting back to normal. Is infrastructure projects getting started up again? Are they rolling? Are they paying? Are the contracts in operation for a while? Are the contracts just getting started? Or are the contracts still delayed? Because Symmetrix share price has recovered on the promise that contracts are starting up again. So I want to see that. And even if you have zero interest in Symmetrix, I think it would be worthwhile just watching their earnings to see, especially this earnings call on August 7th, to see and hear whether or not kind of the economy is getting back to normal, right? So that's something I'm interested in. Cipher Pharmaceuticals. Interesting one because I know a lot of investors in Cipher. I don't really follow it too closely. It's not my niche, but it's up 775% in the past 5 years. So fantastic winner for many, many people. $311 million market cap. Earnings are on August 7th. They have a conference call set up for the morning of August 8th. And I think people are eagerly anticipating that because despite being up 775% in the past 5 years, this is a little small, but in the past 1 year, they are actually down 1%. So full year of consolidation, basically. And I think people are kind of excited for something to happen quickly here in the future, right? Thinkific Labs. Again, this is one that I have growing interest in. I'll probably have a video on them soon. Earnings call. This is the interesting feature where you can log into the earnings call right here on Yahoo Finance. So that's new. I haven't tried it yet, but I do want to go take a look. Down 39% in the past year, down to $2.10. One of the big reasons is this was like a venture capital, and their venture capital company, Rhino, has been selling the heck out of it. Rhino has a lot less shares than they used to. They still have some. It's still a concern. But as Rhino keeps dumping their shares, the share price just keeps going down and down and down and down. And potentially at some point, this could be an interesting company for a bit of a turnaround. They have earnings August 6th. I will be watching. And they have, 5 p.m. Eastern Standard Time, when they have their conference call and their earnings coming out. So Thinkific is one to watch as well. And those are basically all the companies that I know are posting earnings this week. There are a couple wild cards. I don't know if this comes out this week or not. NTG Clarity Networks in the past, trying to get their share price up, used to post earnings pretty early. August 2nd and July 29th is when NTG Clarity Networks previously posted earnings. They're late. They're not late. I don't think they actually have to post earnings until the end of August. They just tend to post early because they're organized and they like their shareholders to push their share price up, right? It says here on Yahoo Finance that August 5th is their earnings date. I think they're just guessing. NTG Clarity Networks sitting at $95 million market cap. And this company has been consistently predictable, which is nice. Back here in September 2024, they had a financing. Share price went down. It goes back up on earnings. This company seems to always, something happens to pull their share price down. They go back up on the strength of their earnings. And then, of course, March, April, and May, when we had that down market from Trump tariffs and trade. And then again, earnings drove them up significantly here. And then again, they had a financing. And because of that financing, share price has been trickling down again. We're getting a little bit of consolidation, but they should have earnings coming up pretty soon. Hopefully that creates a spark for NTG Clarity Networks. I just don't know when earnings are. Could be this week, could be next week. We shall see. And another one is OmniLight Industries. Again, Yahoo Finance is saying August 5th. This is a $21 million market cap company starting to get some buying pressure. Finally, very happy about this. This was a very quiet stock. Not a lot of people were talking about this one, except for me, like I was saying here. Finally, I am not sitting alone in the dark talking to myself about OmniLight. This was the day when they had the share price go up, where they had significant buying for such a small company. I was pretty happy about that. And these were all cross trades. So excellent news, a large investor buying OmniLight, which is great to see. Now, in the past, they previously reported earnings July 31st, August 2nd. So it does seem like OmniLight will probably be reporting earnings this week. Final one, Sanuwave Health. Good timing on my video. I made my video right here around June 6th. Share price was down. I think it was about $27, 26 something when I made my video, right? Back up to $35 now. Earnings August 8th, conference call on August 8th for Sanuwave, right? So very interesting time here for this one. However, they did provide guidance, so it's not so much what the numbers are going to look like. I think we know what the numbers are going to look like. It's going to be more what they say during the earnings call for continued growth for this company. So that's it. That's all the companies that reported earnings. That's all the companies that are going to report earnings. That is the end of my presentation. As always, thank you for watching. If you just wanted to watch the presentation, don't forget to give it a like, subscribe. Otherwise, hit me up. It's time to your chance to ask questions, talk about different stocks. I've got a little bit of time here to chat. So let's move to the Q&A board and see what we got. See how many people we have. 48 people, a little low, but that's understandable because a lot of people, especially my Canadian investors, are on vacation today. So leaving question early, can we talk about California Nano after the weird end-of-day drop Thursday? It seemed so steady Friday. Where do you think it will go from here? Well, look, I'll bring up California Nanotechnologies, right? How can I word this? The shareholders of Cal Nano, it's tough to see if we bring it up here. They released earnings. They were at roughly 50 cents, something like that. It may be better if I just bring up the one-year chart. You just see that little drop at the end. Let's go to this here. You could see that a little bit better. This one's been trailing. Where do I think it will go from here? Where do you think it will go? It's been going down since October of last year. It's been going down for a long time. Very hard for me to sit here and say, no, it's now going to go up, right? Investing is a balance of risk versus reward. Typically, you don't want to buck the trend too much. And when a stock has been going down for basically 10 months, I'm not going to sit here and say, well, the only place it's got to go is up, right? So I hate to say that for investors, but, you know, they lost their largest customer. And we kind of knew that. And when they lost their largest customer, they were sitting at around 55 cents stubbornly because they have such good shareholders, such high quality shareholders. I wish, you know, so many companies would love to have the shareholders of California Nanotechnologies because their shareholders love them. They believe in them. They like the CEO. They're stubborn. They're willing to stick with this company for years and years and years. So they released earnings, which were not very good, right? If you go to their earnings, it's not pretty, you know. Significant improvement to customer concentration, revenue of 717,000. When they don't put the numbers here of what it's up, that means it's down. It's down and is down significantly. So they lost their largest customer. Everything is down, 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 down. And now they're basically trying to rebuild with customer concentration. So where will it go from here is, you tell me. The company needs to tell me. When are they going to be able to rebuild their company When are they going to be able to add enough customer concentration, i.e. contracts from enough other clients that they can rebuild their earnings, rebuild their financial fundamentals? Because right now their financial fundamentals took a big hit from losing their biggest customer. Now, shareholders were so massively stubborn, and it was beautiful to watch, that they released earnings here 5 days ago, right? This was fascinating here. So this was July 30th, they released earnings. And when you go look at the data on this, on July 30th, the share price didn't even drop. I was amazed. Look at that. They released earnings, and it was still, it opened at 48 cents the next day. It actually reached a high of 50 cents the next day after earnings. People were just holding. And it was finally, once it hit people, that it could take a while to rebuild that revenue, rebuild that earnings, and rebuild this company. And it was only then that it dropped significantly. And then after it dropped, again, we had those same beautifully stubborn shareholders that just loved this company to death, bought the dip. Everybody says buy the dip, and drove it back up again. So it's been volatile because nobody knows what to do with this company. Like, earnings were bad. It's going to take a while to rebuild the company, but they have such good stubborn shareholders that every time it drops, they buy it up. So volatile, unpredictable, good company, very good company. But I mean, obviously, it doesn't matter how good your company is. You lose your largest client and it's going to hurt. So when can they rebuild? When can they rebuild? Wiser AI systems. Well, I can't I can't take a look at a company and just right off the bat tell you whether or not it's a good investment. That's not something I do on a live stream, especially. $11 million market cap for Wiser. I could tell you I'm biased already because it's on the CSE. I don't invest in a lot of companies on the CSE, on the Canadian Securities Exchange. I've been burned quite a few times. They're auditing their financial information that they're supposed to report is a lot more relaxed on the CSE than it is in other exchanges. This is basically the equivalent of like the OTCQB, or even, it's barely above the pink sheets in the US. Oh, let's be nice and say the OTCQB. So I'm not a huge fan of the CSE to start, right? The other thing is it's AI. So that I'm pretty biased against that. There's a lot of AI companies that are absolutely a pump and dump out there. So the question always becomes not what I think. The question always becomes, do you have enough knowledge to read the earnings? Like, do you know how to look at earnings and determine what the true value of this company is? And I could tell you, I'm not super excited about a company, especially a company that says it's an AI company with zero revenue. So right now, I can't tell you, where it's going to go from here, whether it's going to go up or down or sideways. Some of these companies, you never know when they're going to be a good, quick trade. But this guy does not invest in pre-revenue stocks, and I especially don't invest in pre-revenue stocks on the CSE exchange. So that's my thoughts right now. Too much risk for me. I got so many companies. I got so many good companies that are making money, that are making revenue, that are making profits, that are making cash, that are doing it quickly, that are growing. I just don't have time. I don't have the risk tolerance to invest in a company that hasn't even made a single dollar yet. I don't know if they have product market fit. I don't know if they're just all talk and no go, right? It's just not something that I do. I typically cover one pre-revenue stock per year. This year it was North Star Clean Technologies, that is Roofy. And the only reason I'm covering them is because they have a facility right now in Calgary, Alberta, Canada, that is operational. So they will not be pre-revenue for another, they're not right now. They're basically running today. And within the next 6 months, we're going to see what their earnings look like. So I am not super excited about any pre-revenue stocks. I do follow Bragg a little bit. Not my favorite. Couldn't tell you why. Something to do with basically, if you go look at management gets paid. Management gets their money. Shareholders are not. And even when shareholders were not getting money, management was getting money. that's the type of company that maybe it finds success in the future, but it sure doesn't build up a lot of trust for me. So go take a look at that. I'm still watching Bragg. And look, I'm not dumb here. Like, I see these companies start gaining in popularity on social media. You know, Bragg seems to be one of those where it's like every week now I have somebody asking me about Bragg. And I think that momentum's going to build up and build up and build up till eventually it pops in share price, potentially. Can it hold that pop? I don't know. It's got to support it with good earnings, good numbers, good profits, good cash. It's been very volatile, right? So I might as well just bring it up. Bragg Gaming Group quickly here and just show you. But I mean, there's the 5-year on Bragg. You know, again, you know, am I very excited about this company? With this, it's been losing money for a losing shareholders money for a long time. But again, you know, management was getting paid. And then when you zoom in, people are getting excited about it. People are talking about it. It's kind of getting pumped, right? Had a massive drop here, crashed. People were bag holders, creates a lot of bag holders. When you have bag holders of a stock, when you have people that lost this much money that quickly, they are desperate. They're desperate to get the share price back up so they can sell and get out without a loss. So what happened? Well, sure enough, they got the share price back up, and the bag holders from here were able to get out without a loss. They brought the share price back up, and as soon as they got the share price back up, it crashed again. And now we've got this consolidation period again. So not building a lot of trust for me, that's for sure. Could we see this again? Yeah, potentially. Maybe in late 2025, they have a good quarter and share price goes to the moon again. Again, my question is, can they hold it? Because this is their 1-year chart and this is their 5-year chart. So convince me, right? Convince me. You earn my money. You don't just make promises and I'm just like, oh, well, what beautiful promises. You're going to be the best company in this. I completely trust you. Here's all my money. It doesn't work that way. You earn my money. And right now, Bragg isn't really earning my money. Do you have any thoughts on how much of a future there is for mobile security towers? I wonder if drones could make these towers look like dinosaurs in the future. You're asking this guy. I'm not the biggest tech guy. You know what I do? You know, I'm 44 years old. When I had my first cell phone when I was 21. I had my first computer, I think, when I was 12. It wasn't a computer. It was that stand that you plug into a television and you could play games on it. And we all used to type like this back when I was a kid, right? There was no typing like kids nowadays. I didn't grow up with technology. So I realize when I have weaknesses, I think most investors should do this. You know, what are my strengths? What are my weaknesses? And I try to supplement my weaknesses by finding other people that are better than me at doing what I can't. And the question you're asking is probably better for a younger person than myself that is a little bit more advanced technology driven. Most of the industry sectors that I've been bullish on has been paying attention to people on social media who I trust, who I build up trust with over time. Social media sucks in a lot of ways, but when you can build a good community of people that, you know, say something, it comes true, you build trust with them, hopefully like I'm doing on my channel. I'm not always going to be right, but eventually, you know, you can trust that what I say is my honest opinion. That's the best I could do. I have other people that tell me what industries I kind of should be bullish in. Somebody told me years ago, ocean exploration. That got me onto Kraken Robotics. So yes, I found Kraken Robotics, but it was because somebody told me to go look for ocean exploration stocks. It's the next big thing, right? So as far as mobile security towers versus drones, I couldn't tell you. All I can tell you right now is that the mobile security tower companies have really good earnings today. And the drone companies do not. I have not found a drone company stock with good earnings. They just all seem to suck. Like no profitability, no cash production, this big excuse of we're investing for the future. but your earnings suck today. So if somebody could find me a really good drone stock that was profitable and cash producing and relatively fairly valued and not sitting at some 80 times earnings, I would absolutely take a look at that. But I'm not very bullish on any drone stocks right now, at least above water drones. I love below water drones, right? But above water drones. Any thoughts on what's going on with Roof and the warrants? I mean, I don't know. What do you mean what's going on? They did a financing. Insiders did a financing for a small amount of money. They did it for 30 cents with warrants at 45 cents, a full warrant at 45 cents. It was a weak financing for retail investors, but you have to try to remove emotion from it. I know people were upset and the share price sold off. I think I heard Wolf of Oakville was upset by it. I'm just not as upset by that financing. What did the share price do since then? So yeah, it went from 35, 36 cents to 32 cents. A tiny little financing isn't going to change the success of the business. I know people are saying that a financing shows you whether or not insiders care about the company. They didn't make the financing available to retail investors or anybody. It was just the insiders. I like it. I like the financing. I don't really care about the warrants they handed out. That tells me when they did this financing, that tells me that insiders wanted to own more shares. They wanted to give the company more money. They could have done a financing for retail investors and given themselves shares for free. They didn't do that. Instead of just doing a financing for investors and giving themselves free stock options and RSUs and everything else, they actually funded their own company with a financing. Yeah, was it a pretty sweet financing for, 30 cents when share price was at 35? And I believe they got a full warrant at 45 cents. Was that a really, really attractive financing? Yes, it was. Does it really change the thesis on the company? No, not really. And I do like that, insiders were able to fund their own company. So for me, the financing is actually kind of bullish, but I also understand the other side of the argument. I mean, there's no right answer, no wrong answer right now. We'll find out in 10 years. If they succeed and this is a 10x stock in 10 years, then you'll look back at that financing and those warrants and go like, what the hell was I thinking? Like, it's like, well, there's no problem. That was not a problem. But if it ends up being a failing stock or a losing stock, and we can look back at this financing and say, that was evidence that should have showed me that the management team does not care about shareholders, well, then that side will be right? It's going to take a few years, at least a few years to figure that out, maybe longer. That's the hard part of the investing in the stock market sometimes. We can sit here and debate all day. I love debating. Sometimes it takes 2 years to figure out who won the debate. That's a hard thing to do, right? So I don't really have a problem. Do I keep an eye on Red Light Holland? I remember you had them on your list. Yeah, no, they lost me, absolutely. You talk about, I was just complaining that Bragg management got paid while shareholders lost money. Red Light Holland, they got paid and shareholders did not, and they did some pretty dramatic things. I know there's a big argument right now where everybody's looking for simple companies. I do understand that, but in one way, I don't necessarily need a simple company. I want a company that's got less drama. We sometimes have these simple companies. Look at High Tide. High Tide's a simple damn company. They have cannabis stores. That's it. That's all they do. They open a cannabis store, sell your cannabis, make some money. It's the simplest company in the world. High Tide has so much drama surrounding their company that share prices just crashed. So I know a lot of people say, I just want a simple company. I would argue that I just want a simple management team. No drama, low drama. Not giving me stress, not when I wake up in the morning and I have emails from the company, I'm not sitting there going like, oh shit, right? Like there's an email, it's probably good, it's probably not bad. That's what I want to wake up in the morning to mentally have, right? So yeah. Do Do you think Game On will survive or bankrupt? The Game On Technologies, that company's gone. That the CEO's gone, the company's gone, it's gone. So there's no survival for Game On Technologies. It is gone. Thoughts on Covio Solutions? Saw it was added by Pender Small Cap. Never heard of them. Is it coviosolutions.to? Let's take a look here. Recommended by Pender, who I obviously love, and is doing well, no surprise, but it's probably off my channel list. I do cover small caps every once in a while. I recently covered Core Medics, simple company, simple management team, simple product, simple investing thesis, sell as quickly as you can until you lose your moat. So I would take a look at Covio. It's been very successful, but for me to leave the microcap space, which I am very, very, very comfortable with, it really has to be an outstanding opportunity. It really does, right? And the reason for that is typically what I absolutely love is discovery. And when you go look at some of these companies, I can guarantee you it's got some pretty decent discovery, right? So it's owned by Pender Fund, probably owned by some other institutions. It's already got some discovery. So one of the things that I don't like about that is, you know, part of the investing thesis always for me, or the advantage for retail investors, is this is your return for 10x stocks right here. This data comes from Ryan Telford on X, who is like the best quant investor you can find anywhere, all around great guy as far as I could tell. And the data that Ryan gives us just proves out everything I've been doing for the past decade plus of microcap investing. And, you know, Ryan Telford talks about 47% of a 10x stock. You know, you need that sales growth. Don't ignore sales growth. You need it. Then you need growing margins, right? You need pricing power. This is kind of the Warren Buffett, what he's looking for, right? Company with pricing power. You want a company that can sell more stuff quickly, and you want a company that can do it at a higher price and get some larger margins. But the last thing you need for a 10x stock is multiple expansion. And how you get that multiple expansion is through discovery. And so as smaller retail investors, our real advantage is to find these stocks before other people do. And as you get that discovery to larger investors, small, tiny funds, larger investors again, larger funds, going through that discovery process, there's many levels to that now. It really does create that multiple expansion. A lot of people call that the twin engine of investing, and that's earnings per share growth, EPS growth, and multiple expansion are the twin engines of finding a 10x stock. And so if it's somewhat discovered, I kind of lose that advantage. So I'll take a look at Covio in the future. I'm not saying no, because I do like Pender Fund, but I don't really know anything about it. Any thoughts on Neo Performance Materials, rare earth plate, Neo? Not for me. I don't do it. I don't do resource stocks, sorry. We've all been there, done that. I think if you talk to most investors, talk to the famous ones, right? If you talk to two of the most famous microcap investors I know, Paul Andriola and Ian Castle, go listen to their podcasts, go listen to their videos. Both of those guys will sit down and say, I went through that phase. I invested in resource stocks. I lost money. I learned my lesson, and then I moved on. So now I personally don't invest in resource stocks because I've tried. I didn't lose money. What I found with resource stocks, it was very much not what you know, it was who you know. There's a lot of information you can get from knowing the right people in resource stocks, and that was not something that was going to work for me personally, right? So what do you think on Hash's future? I think it's okay. I mean, that is simply solventless concentrates, and their future is going to depend on whether or not they can produce cash or not, right? So that's kind of one of those things. I'm going to let the company tell me what their future is. They had some people have called it creative accounting, where basically they had a big hit in their earnings because of accounting changes. People absolutely hated that. Some people just left the company and left them for dead, and we had this massive crash in share price. One of the interesting things is, again, try not to let emotions take over your investing, because you will see here in the past month, simply solventless concentrates is up 50%. It's actually up more than that. Right now it's a 33-cent share price. Some lucky bugger bought it on that crash for 15 cents. 15 cents. They're up way over 100% today, from 15 cents to 33 cents. So you have to watch. Sometimes in these crashes, there is opportunities. And obviously, I think we can play this out in hindsight, probably overvalued here, right? Especially overvalued once we figured out, the new accounting practices they're using. But was this massively undervalued? Yeah, I think in hindsight, we could say that was pretty crazy. And now it's sitting at 33 cents and seems to be consolidating. And I think its future is going to depend on whether or not, number one, they could earn back trust. And mostly they're probably going to earn back trust through producing cash and not doing more dilutive financing, right? That's what we're looking for. More CEO interviews probably coming out, and make some cash and your share price will go back up. D-Box. Yeah, I love D-Box. So I just made a video on D-Box. I called it something about one of my more bullish stocks or something, or this stock is making me bullish or something like that. I made my video at 28 cents. It was recently. It was somewhere in here. No, it was somewhere in here. Made my video at 28 cents. They still haven't ran yet. They're still at 27 cents. That's very reasonable. It's my educated guess, it's my belief that the reason it hasn't ran up higher, well, for one thing, we've had a market that's kind of softened a little bit. But the other thing is, I believe there's a large shareholder that is selling. So we see this sometimes with microcap stocks. It's had a good run. I mean, it's up 300% on the year, right? So really good run so far. Unfortunately, I didn't cover it back here. I wish I did. I covered it closer to up here. I still think it has a great future potential. Otherwise, I wouldn't have covered it, except we see this sometimes when we get some large player in a very small illiquid microcap stock selling, you get this volatility. This is all happening with no news, no information from the company, no earnings, good or bad. This volatility is simply coming from people buying and selling. That's it, right? And I think what's partially doing that is every time it seems to go up to this price, some large shareholder ends up selling, and then you get this drop down to here. It seems to be happening again. So a bit of educated speculation on my part, but I do like the company. I like their potential. It's one of my more, I'm pretty excited about D-Box, actually. I like them. I'm not a big fan of movies, and I almost like that because I'm not biased. I'm not like sitting here cheering on the movie industry and being like, that's why I love D-Box. Like, I'm actually a little bearish on movies. I used to go all the time, and now I go to like one movie a year tops, but I could see the potential for D-Box, growing in the future with their D-Box systems, not just in movies, but in arcades and some other opportunities that they have. So Next Tech, I don't know what Next Tech is. Next Tech AR, that one's a shitco. That's my opinion on Next Tech AR. Any opinions on Good? No, I don't. I know a lot of people have asked me to cover Good. I have not researched them enough to have an opinion, but I do know some very good, very intelligent investors that do like the company. I just don't know it well enough personally to have an opinion on that today. I'm loving D-Box. I hope their international expansion goes well. I went to that F1 movie with a D-Box seat. Now, well, that's the F1 movie. It's interesting for D-Box if you go look at the potential opportunity here. And it's going to be sad to see, because I know some people are already talking about trading it just around this F1 movie. Like, this F1 movie is going to make D-Box famous because it's a critically acclaimed movie. It's doing very well. It's very popular. It's going to make tons of money. D-Box's revenue should go up in the next 2 quarters due to the F1 movie. The D-Box seat pairs perfectly with a racing movie. But the real excitement for D-Box is that F1 movie has created some more demand for, where are arcades? I feel like a dinosaur because I grew up at the tail end of arcades. When I was younger, arcades were very popular. You know, there's one TV in the house. Dad had that TV to watch all the time. I only got it Saturday morning cartoons. So when I had a few pennies in my pocket and some time to burn, I would run down to the arcade, and that was where you played Pac-Man or Donkey Kong, and arcades were great. And then they died. They're terrible. You can go pass by an arcade at your local mall, if it's still got one, and it's normally dead, beat up, and smells like stinky pop on the floor, right? But I think this trend is changing where there's so much new technology now with VR and this haptic stuff with different movements and seats and 3D and 4D. And I saw some 5D stuff coming out that it is looking like arcades are making a comeback. Super happy about that. I hope they do. They were fun. What do I think about X-Row Technologies now? Did X-Row succeed in any way? The last time my last few videos on X-Row Technologies was calling them a shitco. So yeah, they look like a shitco, and it looks like I was right. So history of Xco goes back here. I liked the company at $1. I thought they were pretty good. They went up to $2.50. I changed my mind. This was driven up through hype and promotions, and it was not driven up through their earnings. Their earnings were not supporting their fundamentals. I thought something smelled fishy. I warned people here. People didn't listen to me. I warned people here. People didn't listen to me. I think I even made a third attempt somewhere down here. People didn't listen to me. It's now gone from $2.50 down to 8 cents. So too bad, but I did my work as best I could. And unfortunately, now they are down significantly. Side note for D-Box, they have tags on social media about their D-Box Seats experience. They get thousands of views. They're getting nice exposure naturally. That's fantastic. That is fantastic. It's good ideas, good marketing, organic marketing, smart marketing. That's the question, though. That's the risk for D-Box. They're doing this. This is great. And they've had a clean slate. They've got a new CEO. He's an interim CEO. We don't even know if it's a permanent CEO. He was a board member, and they've got a whole bunch of fresh faces on the board. So up to this point, D-Box was a very conservatively run good business. Lots of cash, no debt, but slow growth. And now they say they're changing for growth, and they've got all these new faces. So that is the risk, is like, what's next? High growth, but you know, the financial fundamentals fall apart, dilution, a sell-off. Like we really don't know. That's kind of the risk. I cannot wait until somebody is able to round up their new interim CEO for an interview. I would very much look forward to that interview. As an investor, do you invest in crypto? Just asking. I know you don't ever cover crypto. No, I don't invest in any crypto. Absolutely none. And but that's not like, in saying that, I just don't understand it. I'm not saying I wouldn't. It's just you try to stick to what you know. But I do warn people sometimes is that people get too stuck on what they know. They get too stuck in their investing strategy. And unfortunately, the markets change. The markets are always growing, changing, adapting. So if people get too stuck on one thing, I feel like it's a weakness. Sometimes people will recite to me investing strategies that worked for Warren Buffett 30 years ago. And I'm like, dude, that's great. That's a great quote, but I don't feel like that works anymore. Too much has changed. You need to adapt. So I don't invest in crypto, but I will admit, like, you have to be humble and willing to adapt. If I can get a time machine and go back in time, I would have absolutely invested in Bitcoin. I mean, you would be absolutely crazy not to. It is up. I think I checked last time. Since 2015, Bitcoin is up 33,000%, I think it was. Ridiculous number. I think it's up more than anything else. And not only that, Bitcoin is something that, because the regulators don't really understand it, you could basically get some of those profits out tax-free, right? So I can sit down and admit I was wrong. I should have been more interested in Bitcoin 10 years ago. Unfortunately, on this one, I'm going to stay stubborn. I'm still not investing in crypto. I'm too old. You know, you're in your 20s, you're in your 30s, do your research, do your due diligence, understand the sector. Absolutely, I support that. But this guy, I can adapt in many ways, but I feel like crypto is just too far. My father retired early from the company he worked at, and he did so because that was when they introduced computers. They brought computers into the work site. They're like, you are going to learn computers. And my father just went, I'm done, I'm out, I'm retiring, right? So sometimes you just have to know your limit. And I feel like it's mine, but I am not one of those investors that is going to sit here and like rag on or insult crypto investors. I'm not going to do it, right? You look at Bitcoin and what a success story that was. So it's just not my niche. XRP is rocking, so is Bitcoin and Ethereum. That's great. You bought at a $30,000 price. Fantastic. And that's just it. I mean, there's so many of those cryptos that are up. People are making money in the space. I know I would lose money in the space. Same way I know that right now, if I went back into resource stocks, I would probably lose money. I know I would lose money in crypto. So I'm an hour and 10 minutes in. I'm done. I'm losing my voice, and I got to end the day here and get ready for another one tomorrow. So, hey, I appreciate everybody. Thank you so much for joining me. Another Monday evening live stream talking about microcap stocks. You could be absolutely anywhere else. You're here with me. We're sitting here chatting for an hour. So I appreciate it. Really humbles me that so many people show up to these things. And I will see you again in a week for another live stream. Good luck out there. Hopefully this bull market continues.